Hey traders, welcome to Trade This Market video update for May 23rd, 2024. You are looking at a daily and a 4-hour chart of ES contract, which is a proxy for S&P 500. So finally, we are able to get the market to break to the downside. As you know, I've been talking about this for the last 3 days now. We were looking for some sort of signal that would tell us that the market is ready to go to the downside. And mainly the reason was that we were extremely overbought in this market. And so I was reluctant to take any trades to the upside, mainly because of that. Now, um, yesterday, I actually thought that the market would actually break down, but judging from how this 50-period moving average is still going up, um, I was a little hesitant that this actually would see some sort of follow through. But we had a huge announcement on FOMC, so that could have been a possibility, but it never materialized. Market comes here, and then it does it bounces off pretty hard. In the overnight session, we do put in higher high, 53.68, which is all time high now. We've been struggling with trying to overcome 53.50, and then finally it broke. But notice when this was going up, the daily chart was going down. And so this was a divergence. And anytime when you have that, you have a less likelihood that the market is going to continue going to the upside when the daily clearly is in downtrend. And so that's exactly what happened. So what happened is that the first thing this morning, right around 9 o'clock New York time, the chart was telling us that this market is ready to go to the downside. And we had the entry right at the 53.63. Market goes all the way to 53.23. Remember, that was the point when market bounced off. So this would have been the exit if you really wanted to take the profits, because it never actually looked back until right here. And this would have been a good exit because mainly this is when the market had bounced off earlier, and 2 days ago, I think. And so you wanted to protect your profit, but even in the case that you didn't, let's just say that somebody hung on to this. Now you had a divergence right here. So we come back actually at 53.16, but notice you had a huge divergence. Market went down, but the momentum went up. And this was a clear sign that you now, for sure, you want to exit this trade because markets are likely to bounce. And it goes pretty hard actually, 53.18 all the way to 53.41. So the first trade, you had over 40 points in here if you had exited the trade right here or here. And then the second re-entry comes in right here, right after lunch, or right actually slightly 15 minutes before lunch at 9:40. And what happened is that you had the arrow, red candle, price closing below the signal line. We still had the daily and a 4-hour chart firmly pointing to the downside. So you felt comfortable taking this trade. And then what happened is that this happens right here. And the exit comes in right here. We had the green sentiment, one, and then you had the price closing above the power, above the signal line at least. And then this is turning. So this was the exit. And towards the end of the day, you wanted to protect your profits anyway. So this was from 53.33. Let's just say the exit at 81. So good, another 50 points to the downside right here. So 40 points here, 50 points here, and that was the day. So does this happen every single day? No. But anytime when a 4-hour and a daily chart gets in the same direction, you're looking for a huge move to the downside. And I'm glad we caught, this huge move to the downside. Now, let's talk about what's going to happen, what's likely to happen. So as you can see, I drew the fib level from this morning's high to the low, and we were looking to see if 23% is going to hold, and it looks like it is holding. We thought we might actually get up to about 53.09, which is 38% retracement, but it doesn't look like, and this is after hours, so you have to take it with a grain of salt. But nonetheless, it is a number, it is a level, and is there. Now, if this doesn't hold, then what we're likely to do, we still have the numbers right here, 23% retracement. I actually added this in the late afternoon session because all along we were looking for this 38.2% retracement, which is 5,200 to the downside. And the reason why I added this is because this is actually coming down pretty hard, and it's going to get into oversold category by tomorrow morning. So just to be aware of this number, I have it 52, 58, 60, somewhere in the zone. And so potentially what could happen is the price could come down here and then do a bounce to the upside. And so upper targets still remain the same, 54.17 and then 55.43. So the plan is we're going to sell off a little bit, maybe to 55, 52, 55. One more level is 5200, and then this market is actually going to go to the upside. Again, what we're going to look for is similarly what happened here is the daily chart turning in the direction of the weekly chart now, and that's going to give us a huge move to the upside. We're likely to take this 53.68 out if we come back here, and then we're going to go up to 54.15 and 55.40. Now, interestingly, what we're going to have to do is look for some sort of sign signal change right here, and then we'll see what happens. We are getting in the extreme zones here, so we have to be really careful. But the market, if it gives us the signal that it wants to go up to that level, then it opens up the door for these levels. So we are going to wait and see what happens first thing in the morning. We're going to let the charts tell us which way this market wants to go. And then we're going to have a daily trading plan based on that information that's available to us. So I hope this helps, and I will see you at the next update. Take care.